trying to get him over here, man. It's been nice out.
That's different.
There you go. All right, well, welcome everyone to another episode. Actually, our 20th episode.
Clap that up. Clap that up. That's
Let's
Now,
wrap it up.
you gotta find it. Now you gotta
Now I have
search.
to-
You gotta search all the way to the left.
You switched
the
it.
wrong
You
button.
switched it on me.
All the way to the left.
okay.
Yeah, episode 20.
20. That's a.
You know it's episode 20. We got Big Sarah out here, right?
Yes.
Sarah pulls up for the special pod.
The first lady of LendMe.
That's it. That's it.
Well, let's start it off right. Let's introduce let's introduce ourselves. Jose Martinez. I handle business development for LendMe Capital, Fun Rock Capital. To my right, I have
Sean McClellan, your favorite broker, and new funding specialist at Fun Rock Capital.
Clap it up for that, Jose.
Right.
Clap it up for that.
Let's go. Doing the mortgages all day. Let's go.
All right, now.
Who I got here?
Usually I'm your hostess with the mostest, Darren Mills, aka El Mágico. However, I got some family stuff to attend to tonight, so I'm only here for half the episode. That's why I'm over here. It sucks. I'm used to being in the control center, the command center, but I'm not. And finally, at the very end, to the left of Jose, we have the infamous, the world famous, world renowned.
Sarah, and I am currently over here rolling out the traditional department.
Let's hear about it.
clap it up.
Yeah,
Add
so
up.
we've decided to centralize our departments a bit. To streamline everything, make processes smoother and more quicker. So we're handling at the traditional department all bank products and centralizing all them here.
Wow.
There
Okay.
you go.
Nice.
Thank you, Sarah.
All right, so now that's it. All right, so listen, today's topic is going to be real simple. Funded fast, speeding up the deal cycle in the commercial lending space, whether it's commercial real estate or if it's commercial lending as far as business funding. All right, so once again, everyone, welcome to Tequila Thursday. If you lost a deal because the process has been dragged on for too long, this episode is to wake you up, right? It's a wake-up call. Okay, so today we're going to break down how to cut your deal cycle in half, lock in client trust, and stack commissions like clockwork. All right, so grab your shot. Grab your shot glass.
Or,
There we go. Come on.
Beverage of choice.
or pour the whole thing. All right, Sean, pass you the glasses.
All right, so
Let's
grab
get
your
it ready
shot
for everybody.
glass and the CRM logins. Everyone should have their CRM logins.
Please, guys, have your CRMs open as we go through this. And if you guys have any questions, not technical questions because we're not technical support, but if you guys have any questions regarding some of your deals, some scenarios, some rebuttals, let us know and we'll help you live today.
Yes, correct. Okay, and I guess to start off with Sarah. Sarah, as far as time killing all deals, right, on the term loan side, or because I do know, how long does a term loan take to get funded?
It depends on what bank we go with, but anywhere from 2 weeks to a month. And a lot of documentation is required for certain programs that we have on the traditional side. In those cases, when we're asking for debt schedules, profit and loss, sometimes if the client's not super on top of it, that could kill the deal because they want a simple process. They're willing to give me the docs, but they're busy. They don't have access to their computer right now. So collecting a lot of docs, it might seem a little overwhelming in the beginning. Of course, I don't like to have to collect multiple docs. However, a lot of times, even if it's time consuming, I'll jump on the phone and complete what I can. So if I know that they need whether it's a questionnaire done or if I need to do a real estate schedule quick to pass over a deal, if that's going to get the deal done quicker, I'll spend the time and try to cut their time in half of searching for the docs or filling out redundant documents. A lot of times we're asking the same question, so let me just I have your ID, let me fill out the app for you, you can confirm it, sign it, and we're off to the races.
That's one of the things you do. I think, I tell Sarah a lot. Please, you're getting so involved on the file, but that's a great thing. It's a great kind of characteristic because she wants to get the deal to the finish line, right? That's one thing about Sarah that's amazing is just she's all about the client, making sure that she makes the process as easy as possible for the client. I want to clap it up for that.
Yeah. And guys, when you're out there, you might have sent out an application to a client. They're telling you how busy they are. don't be afraid. Hey, let me streamline the process. Not a lot of people do this. Let me take the application over the phone. I'll get all the info we need. Just shoot me over the bank statements or whatever it may be they're applying for. And that's going to help not only build that rapport with the client, build the trust, but it's going to save a lot of time getting that deal looked at and processed.
You know what it is, guys? When we say time kills all deals, just understand the more time that the file is lingering out there, it's never a good thing. Right?
Never helps.
This is not like wine where the longer you age it, the better it is. It's not what it is. Okay? In this deal, this is a contact sport. Whenever you're doing any kind of lending, the more people that you reach out to, it's supposed to be the better the more conversations you have, and then that's supposed to lead to more fundings. Well, having a deal out there a long time, well, it's also contact sport for everybody else, right?
Yeah.
So you're also leaving your deals the opportunity to be contacted by another broker.
Competition.
You're giving your competition a one up on you, because let me tell you something. I speak to people all day that they've had people working on their file for a week. Right. And I'm like, really? That guy's working on it for a week? I'll get you an approval in a few hours. Trust me, if I get that approval, that guy's gonna sign with me. You know what I mean? And again, so we try to work it in reverse sometimes. We try to use that time that they've already spent with somebody else against them. So we don't want you guys out there to be that person. You know what I mean? Let's try to get the deals in. Let's try to get the documents. That's why Sarah doesn't waste time. Listen, I don't do that. If I for me, if you're not interested in getting this done fast, and I really don't want to work with you, Sarah is gonna make sure that I don't care if you're interested or not. We're gonna get this done, right?
I just want to give them a pre-approval at least, because a lot of clients, they want to see something in black and white. Once they see something in black and white, maybe it'll make them move a little quicker or be enticed now that I qualified them. So that's why I try to do it. Of course, there's days I get busy, but if you do have the time, help out the client. That way.
Try to get it done.
Yeah.
We're going to help you.
So let's toast first. Funding it fast and getting paid faster. Well, cheers to everyone.
Cheers.
Cheers. All right. Now, killing deals. Now, Sarah, you had mentioned that the term loan process takes obviously 2 weeks or more on average, right? And do we have different programs? What do you do with clients that need money, let's say, immediately?
So with clients that need money immediately, we refer them over to the revenue-based department. If they qualify for that and have, healthy bank statements, then that's an option to get, funding quickly. Is within 24 hours, they can get an MCA. Or we can pivot to credit cards. They might move a little faster if they are open to that. So there's a few other options here if they don't want to wait that time. However, it all depends on how quick the client, how quick we move. Of course, we don't control the bank, but like this episode's about, if we can guide our client, we can still control some of the time frame.
Right.
Darren, what's the quickest you've closed a client at a revenue-based financing? You can fund in how long?
Well, I mean, let's use Jonathan. Shout out to John Yella. Clap it up for Yella real quick.
Yella.
Clap it for Yella. Yella recently transitioned to the traditional department with Sarah as well. They're going to be both heading the department, getting everything traditional closed. But I mean, look at that deal Jonathan had last week. He got the approval at 9 a.m. He sold the approval. By 9:45, your driver's license and voided check. By 10:15, the contract was out. He signed it, did bank verification. By 11 o'clock, he did the funding call, and he got the funds in his account by noon.
Before he ate lunch.
Yeah. You know what I mean? So the deals, like, we can fund as fast as you guys move. Well, not you guys, because you guys are actually going to be doing the same thing that we're doing. But, guys, we can only move as fast as the client moves, right? If the client is fast and the client's proactive with revenue-based funding, we can get you guys done. We can get people done in 3 hours, right? The approval came in at 9, did the money in his account by 12. You know what I mean? So it can happen that fast. Now, again, it was a smaller deal, so they didn't need tax returns or anything like that. But, it can happen that fast. You know what I mean? So, again, we can only really move as fast as the client moves.
Right. And you can always use that to your advantage. Say, look, you want the money, let's work together, send over the documents we need, because sometimes people are either, whatever, they're busy, they might be lazy, they might be evasive. But when you tell them that this is only going to help them get the funds in their account sooner, it might put a little fire on their rear end to get the paperwork over to you.
Now, one of the good things is that we have someone representing each department, right? So today we have traditional financing, premier financing, right? We have mortgages,
Yep.
and we also have alternative financing, right, where it moves a little bit quicker. What are the bottlenecks? Let's start off with you, Sarah. What are the bottlenecks that you would say are in your department? What slows stuff down aside from just? Is there anything else aside from just the documentation?
The documentation slows us down at times. Sometimes things out of our control because we are the traditional department. We're working directly with certain banks. So at times it's out of our control. And in that time period, you just have to keep your client engaged, keep them on board, let them know that you're following up, that if any time passes, you're going to expedite the process on your end as quick as you can. So it's just all about following up because in that time frame, if they're just being submitted for a loan, you might not need to be in constant communication every day. However, it's very important to just tap in periodically so they remember who you are, that you're associated with that deal, and that they come back to you right after. They'll probably want more funding.
Nice, very nice. All right, so, and Sean?
Wait, hold on really quick. I just have to address, Jose, the comments. Everybody is saying that the tequila looks kind of strong tonight. I don't know if it's the bottle. I don't know if it's because when we took a sip, we all made a face. But everybody's saying that the tequila looks
It's
strong
organic.
tonight.
It's organic.
Yeah.
Agaves.
It is
Three.
organic.
That means 3 agaves. What does that mean in Spanish?
He said it Mexican.
What do you mean?
Yeah, that's crazy, bro.
Where's the horn?
Well, I'm just saying, tres agaves. That means 3 what?
Agaves.
Is that the
Agaves.
plant? That's the
That's the
plant.
plant. That's
Agaves.
the actual plant, yes.
That's where it comes from.
All right,
Okay,
getting back to topic. So, I'm sorry, Sean.
Yeah.
So on the Fun Rock side, right? Mortgages.
How do you guys do it in Mexican over there in the Fun Rock side? That's crazy. No, go ahead.
Yeah. I mean, mortgages, typically, look, every borrower, if they have any, what we call hair on the deal, like, all right, so if they got late payments, foreclosures, bankruptcies, things like that can always slow a deal up. We got to kind of get clarification. But the one thing I'm very transparent about is usually the appraisal, right? We can have a very clean file and we can move very quickly as long as there's, like I said, no hair in the deal. It's, good credit, no derogatories. But the appraisal always takes a long time. If somebody wants to get a good rate, a good term, that lender's going to require an appraisal. So sometimes it takes a little time for them to get out there, depending on the location, right? So depending on what state they're in, what town, how soon we can get them out there, and then how fast that appraiser can get the report complete. Now, we do offer an option for the appraisal to be rushed, but they do typically have to pay a little bit extra for the, for that being expedited.
Nice.
I never knew that you could rush an appraisal. I never knew that. I learned something new every day.
And I just wanted to add, just by working with the mortgages too, title and appraisal are the only thing that would hold us up, like Sean mentioned. And a lot of times I see there's liens and judgment that come back on title that the client doesn't tell us about or claims they're unaware about. So when we have to sort those things out or find documentation that certain things are paid off, might just take a couple more days.
Right. And like I said, like last week, we have to put ourselves in the position when we're speaking to our clients, like we're their defense attorney, right? So if there's anything that can potentially slow the deal up, just be transparent because we're going to help them navigate, regardless of the situation. So we want to be able to know what we're up against on their file, if there are liens, if there are, unpaid taxes, something like that, so that we can help get the thing moving as smoothly and streamlined as possible.
You know what? Something like a saying that Josh, shout out to Josh.
Mammoth.
Yeah, shout out to Josh. Josh had a great saying. First time I heard that, he said, there's 3 people that you don't lie to. Remember you heard that? He said, 3 people you don't lie to. You don't lie to your doctor. You don't lie to your lawyer. You don't lie to your broker. You know what I mean? All our interests are in line, right? If you guys don't get the money, we don't get paid. The more money that you guys get, the more money that we get paid. So trust me, if you want $1 million, I would love to fund you $1 million, but you qualify for 10 grand. So here's how we're gonna scale up. You know what I mean? And this is just
reality.
It's just reality, right? People want lines of credit and business funding all day. What they don't even realize is that lines of credit, you usually get like the lowest approvals. So you guys that want like $1 million lines of credit, it just doesn't exist for the majority of businesses. Jose, if somebody wants a traditional term loan, right? it's something like what 20 or 25% of their gross annual sales that they can get qualified for, or whatever's on their tax return. What is it again, Jose?
It's I think, Sarah, up to 30%, right, with one particular bank. But on average, you're looking at 20 to 25% of your annual sales.
Right, right. So sorry to cut you off, but that means that if somebody's doing $500,000 a year, that's $50,000. That's $50,000 a month that you're doing. But $500,000 a year, that means that they're only really going to that they
Did
can
you just
only
say $500,000 is 50,000?
50 a month. A month, I said.
He did say month.
No, $60,000 a month. I'm sorry. Tequila Thursdays. So they're doing about $60,000 a month. So in an MCA, we'd probably be able to get them like $50,000. But they want that big term loan, right? So the most that they would qualify for is what? What is that math? What, 30% of 500,000?
It's what, 150?
Something like that, right? So these guys that want like a $500,000 line, it's not it.
It's very true, Daryl, because it's just
150,
once, banks, like I said before, we work closely. Let me give you a national bank, Chase. They're everywhere, right? Chase only does 25% of your gross revenue. If you do $100,000, the most they will ever give you is $25,000 on a line of credit or a traditional bank loan. So it's only a $25,000 approval if you're making $100,000. Going back to the example that Daryl mentioned, if they're doing $100,000 divided that by 12, that's what, a month?
12,000.
12,000 a month.
Oh! You mean like over the course of the year?
Yeah. Well, if
I
you're
don't
doing
know, bro.
100,000 a year, what's the calculator? What is that? We're looking bad right now. This wasn't. See, guys, as you can tell, this
Have
is
a
not
calculator
staged.
up on this desk.
This is not staged. Well, look,
Improv.
if we're doing $100,000 a year, divide that by 12, we're looking at $8,333.
Right.
Right. So something like that, Darryl. What does the client get approved for? If they're doing $100,000 and they're doing $8,000, call it $9,000 a month.
For an MCA?
Yes.
Like if we're doing an MCA, yeah. I mean, listen, if you're doing, see, the MCA with how I submit, it's a couple of mitigating factors, right? So if it depends, like if you keep a lot of money in the bank, right, you'll get a longer term approval, you'll get a higher dollar amount. So you could feasibly be doing $8K a month, and I could potentially get you on super clean deals, great money in the bank, solid credit score. Solid credit score for an MCA is anything over 650, right? So in the MCA space, I could potentially get you, if you're doing $8K a month and it's solid, I could potentially get you somewhere like 12 to 15K. But the majority of businesses, you're probably going to get approved for anywhere from like 5 to 7,500.
Yeah.
Right?
So let's take that number, because I think this is going to be great, and we're sidetracking from what obviously agenda today, but I think this is important.
Very helpful.
He's going to get you 50. Let's call it 10,000.
Yeah,
Let's say
argument's sake, 10 G's.
$10,000. He's going to get you $10,000. Let's assume that someone says, "Hey, your business is mediocre. I'll give it to you." It's a 6-month term, right? Now, 100. If they're doing the same dollar amount, right? So let's say $10,000. Now let's use 120. $10,000 a month. That's $120,000 a year. Your tax returns are going to show $120,000 gross revenue. $120,000 times 0.25. You're looking at a $30,000 approval over a 5-year term. Let's say you're amazing. Your credit score's up to par. Now that's $30,000 over a 5-year term, right?
That money is spent day number 2.
You're locked in for $30,000. Now, Daryl can get you $10,000 for a total of 6 months. And I'm sure you know this already. After 3 months of a positive payment history, you're able to refinance
Get
it.
more money.
What does that mean? Give you access to, let's assume that the business stays the same. Give you access to another $10,000, right? So now
I can give you access to $40,000 over 12 months, whereas with the bank, you get $30,000 for 5 years. I mean,
now let's take it a step
compounding.
further.
And
$40,000
times 5 years,
times 5 years,
$200,000.
give you access. A business that does $120,000 that the bank would only give you $30,000, 5-year term. He's able to give you $200,000 over the same term. The difference is that the term is shortened, but he's giving you access to more money.
Yeah.
Right. So now a business is always going to say that they're growing. Right. A business is growing, so I need access to money. That's why I want a line of credit. So that's it. This is so not.
I have a question for you, Daryl. Like when you get, because I'm part of the traditional department,
There you
and
go.
everybody,
Shout out to
know,
the
they tell me that interest rates are super important to them,
Yeah.
and that they really care about the cost of money.
Yes.
So now, when you're able to get somebody a MCA and you refinance them, can you get them cheaper money, or how does that work
How do you
in
overcome
terms
that?
of helping them, get a little bit cheaper costs, and if that's their concern?
Daryl,
Oh, I'm on the spot. Ooh, no. So, well, listen. First off, I like to delve into a couple different things, right? Everybody cares about interest rates, right? Because obviously no one wants to pay a super high rate, but it's all about how soon they need the money, right? That's the main thing. Because, I mean, if they're not really in a rush for the money and they can wait a little bit, then yes, we should do like a traditional program. But I mean, listen, if you need money tomorrow for payroll or all your employees, or listen, if all your employees are going to walk, let's just say somebody submits money a deal today for an MCA, says I need money tomorrow for payroll. I don't think you really care if the money's 50 cents on the dollar because all your employees are going to walk the hell out of that office if they don't get that paycheck, coming into the weekend, right? So at that point, it's opportunity cost, not really so much the cost of capital. But
Certified badass.
hopefully I handled that correctly. But now, Sarah, just to speak about the renewal process and getting cheaper money. So typically, a lender, if you renew, the cost of capital never really gets that much better. I mean, the most that they'll do is they'll extend the term a little bit, right? Or they'll give you a little bit more money than you really deserve. The only true way to get the cost of capital down, sometimes with some lenders, is just to move the deal, right? So let's just say I have you at a C-paper lender because right now your deposits suck and it's your slow season. You're at a C-paper lender. But now, like Jose said, you got that 3-month term. You got a 6-month term. Now it's 3 months in. Now we're in the spring. Now stuff's starting to look a little better, right? Now that C paper bank, I'll get bought out by a B paper bank or maybe even an A paper bank. That money will be cheaper.
And they
right?
see the payment history. And,
Correct.
Yeah.
Now that's really the only way because you understand like this. Usually these guys their businesses don't really get better. They stay the same. They plateau. Right? So these lenders are just going to keep renewing at the same dollar amount, but they're just giving them access to capital. But trust me, typically if people are taking MCA money, they really don't care. Interest rates is not, or the factor rates are not really that important to them. It's more so just access to capital.
So, quick question: is an interest rate and a factor rate the same thing, Dow?
No, it's not. In interest rate, APR, everybody knows banking. It's compounding interest, right? The money's amortizing, okay? But the majority of these revenue-based financing deals, they're shorter term.
Set cost.
So, I mean, what's the APR if you only have the money for 3 months, right? I mean, they're going to try to break it down into a rate. However, what we like to call it, well, Jose kind of came up with this, it's an MPR. Not an APR, it's an MPR.
What does that mean?
It's a monthly percentage rate. And really, all that is just breaking down the cost of capital over the amount of time that they have the deal. So let's just say this. Factor rate is a flat fixed cost product, right? So let's just say the rate is a 1.40. 40 cents on a dollar. That means for every dollar that I let you borrow, you're gonna pay me back $1.40 pretty much on every single dollar. So if you borrow 10 grand, 1.40, you're gonna end up paying back $14,000 or $4,000 in interest. So how Jose would go ahead and say we're going to break that down into an MPR, a monthly percentage rate. Well, if I give you money at 40 cents on the dollar over the course of 10 months, that means that your monthly rate is 4% a month. Right? And that's just the simplest way to break it down to people, right? And, you get early prepaid discounts and stuff like that. I don't want to ramble too much on the revenue-based financing side, but that's it. A flat fixed cost product. It doesn't amortize. You borrow X, you pay back Y, and really that's it. And there's early prepaid discounts because every payment that you make goes equally to principal and interest. Not like a bank loan where you pay all the interest up front.
All right, now Sean, moving on to you. I guess the question.
You're getting pretty good at this hosting. Don't get too comfortable, bro, because this is the only week you're gonna host. Okay, you're playing.
I'm not getting roasted.
No, man, you're playing like different tunes and stuff. I don't like how you're operating this. All right,
I gotta show you how it's done.
Certified Badass was good.
Sean, go ahead. I'm sorry. So we were asking you, I think, what did we ask Sean? What was the question again? The question to you was the bottlenecks, right? And I think you answered it as far as
The
appraisals,
could be an issue,
title.
obviously, title, if there's something on the title that needs to be resolved. But yeah, I mean, honestly, we move quick. If the borrower can provide paperwork, we're on it, right?
Nice.
But the biggest thing is obviously the appraisal, having an appraiser come out. They have to go do the inspection, write up the report, put it in our hands, make sure it matches, everything is good to go to meet that lender's the needs. And then from there, we can move forward very quickly as long as we have all the paperwork in line.
Now, I actually have a question for Sean because Sean, you've been doing mortgages for years. As far as like a bottleneck for your industry is concerned, sorry, I'm playing with the plastic. So when you guys see something come up on title that you didn't really suspect, how do you approach that? Like, how do you address that with the client? Like, are you frustrated? Are you just kind of like, dang, dude, like, why are you making this process different? How do you overcome that? Funk Master Flex night.
They want to know.
I mean, that's really a case by case situation as far as what's on the. Is it a purchase? Is it a refi? So.
All that matters?
Yeah.
Okay.
Is it something that's their fault, or is it something that the seller has an issue with? But at the end of the day, time, right? So we just got to address it. There's no sugarcoating it. There's no way to make it friendly and nice. You just have to address reality.
But you ask them like, why? Like, hey, Brian, why didn't you tell me this up front? We could have seen all
or
this
something
time.
like that. Yeah.
Like, how do
yeah,
you like?
100%.
Does it frustrate you? Like, how do you get old? Because I get upset.
If there's like a lien or something like that they're trying to hide and slip one past the goalie, then yeah, that comes to a point of frustration, 100%.
And
you know.
And I would say, have you seen a lot of deals either killed or lost at the end, at the finish line? Because once you're at the finish, I know I'm just personally I have.
Yeah.
But just on your input, have you seen a lot of deals get killed at the end? And I think that's.
I mean, it happens. You know what I'm saying? It's not like something that happens like at a huge majority rate, but it's certainly a variable that can kill deals and can be a little bit frustrating. You know.
So I think it's safe to say dishonesty of the client can make the time frame longer in all
That's it.
departments.
That's what
Yes.
I say. We're like your defense attorney. Do not. The more nonsense that you're trying to hide from us, thinking that it's going to benefit you, it's just going to hurt.
Yeah, everybody here is really good at structuring deals. Daryl submits and is really creative and has relationships with these people. And Stanley loves the hard mortgage deals and loves to structure them
likes them hard,
properly.
yeah.
He
and-
sure does.
Oh my god.
As long as the
But no, he's
relationship's
really
appropriate.
But yeah.
he's really good at structuring the deals. So when you're up front right away, that can cut the time
Honesty
frame as well.
is the best policy. That's
You know what? Speaking of somebody that's hard in the mortgage industry, I have my guy here,
Who's
Joe Duran.
Oh, Joey G.
There we go, Joe. We're gonna clap it up for
Where'd he get
Joe.
that fancy glass from? He's got ice in there. Look at him, man.
Look at you. There it is. All right. So now we're actually doing something different today. We're shifting over, right? So because we do have a lot of team members that want to be able to give you the knowledge and obviously the opportunity to ask them questions and also grab their input. So we actually have Carl coming over. He's actually working on a deal right now, but he's be coming over here shortly. So Joe, we have you now. First of all, welcome and introduce yourself, Joe.
Joey.
Hey, how y'all doing tonight? My name is Joe Garand. I'm one of the senior loan advisors here at Fun Rock. Actually, just working on a deal. New fix and flip came in that we're doing in-house. Client sent over the scope of work, collecting other documents, bank statements, entity docs.
Nice.
So, yeah,
Okay,
looking-
perfect.
looking
And
to
I think
close that this month, hopefully.
So, Joe,
Very nice.
What in-house? Like, can you explain to everybody what that means?
Yeah, so, we're brokers, but, we do so many deals that we could also lend ourselves on certain deals. But, on a deal like that, we want to really vet the client, make sure the credit score is good up front, make sure they have some experience, make sure they're prepared, they know what they're doing.
good. All right. Now, yes, 100%. And just to summarize what he said, because he was a little low, is that we do have our own lines. We do lend our own money, right? We do lend our own money. But if it does not fit our box or our criteria, according to the line that we have, because there's certain boxes that have to be checked off, then we do go ahead and broker it out. But because of our relationships, we're able to broker it out at a level where we're not charging, immense broker points, if any, right? Some of the lenders we have relationships with, they don't even charge any points in some cases, but the clean has to be a clean deal in order for that to happen. And I see someone just walked in, which is Mr. Let him introduce yourself. To my left, who do I have?
Carl Gillette, your mortgage guy.
Nice, Carl. And you were just closing up or wrapping up a deal, I think, Mr.
Guillotine. Oh.
Mr. Pierre, right?
Mr. Pierre, correct. Yes. Had some long conditions. It's been a long day. It's been a hectic, long day for me. So, expecting to get a clear to close at least by tomorrow.
Nice. So today's topic, guys, and you guys just walked in, is bottlenecks, right? How do you overcome bottlenecks, and also too, how do you overcome it, and what are the bottlenecks that you face on a day to day, right? And I know Pierre has been around for a very long time,
Correct.
right? And I guess just if you can just tell us a little bit about the deal, what has been holding back, because this one actually has taken a while for you to close. I think, and I'll let you explain it, but also mention in there he went on vacation.
Correct.
right? So I guess just tell us a little bit about the deal and what's been going on.
Yeah, so the deal is basically it was a cash out refinance. Appraisal came in, it was kind of low, so we couldn't do a cash out anymore, so we had to change it to a rating term. And then obviously he went on vacation and he had some death in the family, so the deal was dragging and so more stipulations came in the deal for more conditions for it to close. So, and we're just handling it right now.
And it was because of the underwriter, correct? I believe.
Correct.
So that also just, ladies and gentlemen, that also goes ahead and influences the decision, right? The underwriter at the end of the day is the one that has to sign off on the loan. So because it took so long, the underwriter that was working on a file went on vacation, so it was reassigned to someone else.
Yes.
So now that underwriter reviewed everything again, noticed a couple of things were missing, and then underwrote the file and set different conditions. Right, and I think that was one of the things you were frustrated about today. Is like we're waiting for a clear to close, and now I'm getting new conditions.
Asking for more.
Right?
Yeah.
That's correct. And the client's fed up, and you got to understand the frustration with the client too. So you just got to, patch it up with the client, walk through him, listen, this is the basic steps. You got to understand, it's a new underwriter, so we got to go with flow with it.
Yeah.
But remember too that we do go as quickly as the client allows us to. The client did have a death in the family. So there was a delay on his part as well, which he acknowledged. That's the reason why he understood a lot of the process. We're asking for new conditions because this file's been sitting for such a long time.
Right.
So there were complications on both ends, but still, he was working all day today. I think this was the only file that you made a priority today to work on, which is understandable because the clear to close, you're expecting it tomorrow. And I believe that if the client does not get a clear to close by tomorrow, what's going to happen is that he gets hit with a fee, right?
Correct, because his term ends with the other lender that he's currently in right now. So if he doesn't close on time, he's going to get hit with a fee. So we're trying to rush it, as soon as possible to get it clear to close.
Is that like an extension? Like the loan's coming to maturity and he needs to pay it off like soon, right? Like
Correct.
ASAP.
And we understand that we're going to do everything within our power when we speak to the clients to be able to resolve their problems. Last thing that we want to do is to go ahead and not do right by the client. So understand that we do make sure, right? I mean, Joe, you're a biggest advocate for this. Is we do make sure that the client is processed within a timely manner. I know you're
Yeah, of
always
course.
on it.
I tell my clients always, because everyone asks, how fast can you close? How fast can you guys close? And I tell them, hey, it's really up to you. Like, as long as you communicate, you get me all the docs needed, we could close immediately, 2-3 weeks.
Absolutely.
But it's not, if I tell all my clients, if you communicate, you get me everything I need, I'm available.
Right.
If I see an email with all your, bank statements, entity docs, scope of work, you're
Gets
ready to go.
uploaded right away.
Yeah, I'm uploading that immediately. I'm letting everyone know that, hey, let's get the appraisal, let's order title, let's close this.
There we go. Now, Sean Coleman, I want to go to Sean Coleman because he did put a question up, a comment, and he's cooking. What are you cooking today? I saw the knives earlier, but I didn't want to interrupt anything. I thought it was sushi you were sharpening your knives for. But I don't know what he's cooking now. But his question is, how do you get investors looking to purchase out of private money into secured funding? They need 100% financing. You can go ahead and answer that, Sean. Joe.
Well, Sean, I'm assuming these are for fix and flips. Are these clients getting 100% financing now? I mean, that's a good selling point because it's not being offered by many, private lenders, banks. So, I mean, it's like they have an idea of what type of lending just based off of semantics. They're like, you're trying to get them out of private money into unsecured funding. Like, these are all like synonymous. I feel like people have.
First of all, do we offer 100% financing as far as let's call it a fix and flip? Let's start off there.
Yeah. If the client is experienced in the last, I would say 4 years. So if they own some properties, they've done some flips. We would need to see some HUD statements, some settlement, agreements.
And it has to be under their name, not
their name or their entity. So it could be
Very good
LLC
point.
or corp, but like they have to be the one that has closed on the deal in the last 3-4 years. With that and a real estate schedule, yeah, we could get that person 100% financing.
Okay, Carl, what's been your experience with just 100% financing?
Expense. I mean, for the expense for 100% financing, I've been getting that a lot lately. I believe I have 2 in the pipeline right
Nice.
now. So, just getting approvals ready for right now. So,
Yep.
Yeah, so I'm ready to close
Get
on
closer.
them.
Don't be scared. There you go. No, okay, great. And that's what it is. The 100% finances is something unique that we offer,
Right.
right? And I think even today we're able to come up with different fix and flip programs, right? Today Joe Joe does a lot of research. Joe wants to make sure that he has an answer for every single client. But also, I think was it an affiliate or was it a lead that came in? Someone was looking, actually, they were looking for business lending, I believe, right?
Yeah, it was an affiliate. It was one of our leads. I've been talking to this guy for months, maybe like 8 months. So, I realized he was a broker like myself. And, we just offer a lot of products that he doesn't have. So he would submit a lot of no-doc funding deals to us. And, he recently has a new loan program. So we're looking to bring him on as a lender, actually.
We'll roll that out soon. Look out in the community. Look out for that because it's going to be something great for clients that you have that have a below 600 credit score. All right, which is huge, very important. But it's only limited right now. It's in the beta stages. It's limited to a couple of states. All right. Now, our second question was from Ian, or a comment from Ian. Sean, you want to go ahead and help me out and read that?
No, I really can't read that.
All right, Joe, you want to help me out and read that?
I got my glasses, Sean. All right. So Ian wrote, sometimes things can come up people don't realize are there. Example, I was selling a house for a client, and 9 years prior, they had a foreclosure, and they had a lien that attached to them personally. But they were released from the lien. Long story short, they got a real estate attorney who looked into it and made the lien disappear.
Yeah, right. Everything pops up in title, right? And I think title at the end of the day is where you catch a lot of the surprises.
That's where you catch all the sources, all the resources.
Now, are you able to overcome, or is title sometimes incorrect? And like in this case, Carl, what would you say?
In this case, yes, I would say that's why you need an attorney, a good attorney, like the real estate attorney. He did his research, and he got that situated.
Now, Joe, you've been doing this for a long time as well, and Sean as well. Or maybe one of you guys can answer this, or just give me an answer. Each one of you guys is what has something popped up ever on the title that was already cleared, like this situation, or that did not belong to the client?
Yeah, I mean, I've had situations where we had to switch title companies, and like they have a different process. Like some underwriters are different than others. So I had a client. He owed money in child support from one county, but then it got switched to another county, and he was current. Like he showed me, he paid like $90,000 a year in child support.
I know who this guy
I was like, my God, but yeah, he was up to date. He was current. But because of like a filing error in some other county 10 years ago, he had a judgment against him. And I think the way we did the deal, because we were refinancing a hard money deal he had before, I just got in touch with the old title company that did his loan before.
Did originally.
And then they had no problem with it. They only looked for judgments or liens in his counties, like surrounding him. And they didn't see that error. It was another county maybe a couple hours away. From like 2013, they had a lien, but it wasn't updated like by the state to get rid of that. So we had to find the original title company where he got that original loan from.
And I think you ended up closing that deal. I think that was
But we had to get some random title company in Illinois that did his loan in the past, and they looked
Getting
past
creative. That's it.
Going above and beyond, right? Getting that that next information, that next layer of understanding. I think you even went to whoever closed the deal before. Was that the case,
that's
right?
what it was.
Right,
We were
right.
refinancing a hard money loan, it had a crazy 20% something. It was a pretty bad loan he had, so he needed help badly. He couldn't get out of it, and then I reached out to the original company that did his loan in the past, and that title company had no problem clearing it.
Nice.
That's great.
All right. Now, quick question, since I have only just you guys from the mortgage department here, is what is your favorite program? Meaning, if you can choose any client that comes to you, what is the client looking for? What particular program? Why? Meaning it can close quickly, less documentation, and how much money can you make on that? What's the maximum amount of points you can actually earn on that? Carl.
My favorite go-to is actually DSCRs, purchase or refinance, mainly because you don't have to show no income. It's just basically off the rental.
Okay.
So, that's how you get qualified from that program.
Okay, so a DSCR, and your answer was because you just get qualified on the rental, you don't have to show personal documentation, correct?
Correct.
Personal financials.
Correct.
Strictly on the property.
Exactly.
Okay. How much money can you make on that? What's the maximum dollar amount you can make on that?
That one we could make at least. Well, actually,
How many points?
How many points? I would say at least 4.
4 points. Okay, great, good. And is there a cap? What are you capped at? Do you know? Because I know majority of your programs are 3 million. So are you capped at? Is that the standard? I'm assuming.
It's a standard. Correct.
Okay. All right. Perfect. All right. Now, Sean, what do we have? What's your favorite program? Obviously, you're new to you're now in the mortgage department, but you've been doing this for a very long time, so you're not new to the space. What is your favorite program?
I would say just like a fix and flip with someone that has some experience under their belt. You know what
Okay.
I'm saying? I mean, the points can vary, obviously, depending on where their credit's at, how many flips they've done in the past. But if you have somebody that knows what they're doing and they can prove it, it's a very smooth process.
Okay. How much money do you think? What's the max? How many
I
points?
mean, you can probably get them like 4 if they're, but if someone's like not experienced or has some credit issues, you can probably get them 5, 6. But
Nice.
usually you're in the neighborhood of 2 to 4.
Okay. All right. Perfect. Good. All right. Fix and flip. Joe, what do we have?
I would say more than specific deal, just an experienced client.
Okay.
So they know what to expect, and they're not going to come back like, I only want to pay 1 point and I want a 6% rate. Like, I've had people say ridiculous stuff. Someone with the experience, they know what to expect, and then it's multiple deals. So let's say it's a DSCR file. The client owns 7 properties. You do right by that client, they're going to say, hey, I need to refi 3 loans. Hey,
So
I have
someone
2
with
more to buy.
experience, what would you charge them? So how many points?
Well, it depends. If it's a typical DSCR, they have good experience, a good credit score, like 2.5. It's going to be between 2 and 3. I would say, money-wise, the fix and flip programs where we do 90 to 100% financing, that's where we could then charge 3.5, 4 points.
And they get a good
4.5.
rate. They get
Good.
a good rate, yeah.
Because that's, I had someone push back on 100% financing once. We quoted them like 5 points. They're like, oh, that's a lot. I was like, oh, you want to do 80 LTV and pay 2.5? You're kind of paying like 22.5 points then.
And I like the way you put that down when you broke it down to me as far as that. And I tell everyone that I speak to, and I think you guys do it as well because I hear it all the time, is making it clear 100% financing does not mean that it's going to be inexpensive, right? Most people say it's like someone that says, hey, I have good credit. I need the best rate. Doesn't work like that with this, meaning I have the most experience. I want 100% financing. It doesn't work that way. The reason why, it's actually more costly. The reason why is because you're not putting any skin in the game, right?
Right, yeah.
There's no skin in the game.
They're
If you're
not
not,
taking any risk. They're not taking any risk.
I mean, the points are higher, but is it really more costly? Like, if you don't have to put down 10%, 15, 20%, like, that's the selling point. People could be mad. Oh, 6 points is a lot. It's like, all right, do you want to put 20% down and pay?
that's how you broke it down to me, and that was it. Correct.
I was like, you could put 0% down and pay 5 points, or do you want to put down 15 and pay 2.5, 3?
So
Like,
there's also leverage to it, so that's why.
Yep. And in my favorite program, in case you guys wanted to know, is I would say the best client for me would be a client that has a below 600 credit score. Right now, you have to find your niche. Right. For me, it's okay if you have bad credit. I don't even care what your credit score is. I would love for you, if you want to pull the cash out of your property, but you cannot because of your credit score, I'll give you money at either a 50% LTV or a 65% LTV. The reason why that's my favorite is because there's not that many people in that water, right? There's not that many people fishing for those types of clients. So now I found my niche, and I tell clients, no problem. What's your credit score? Perfect. Okay. What's your balance? Balance is $100,000. Okay. What is the property worth? $1 million, or let's call it, and you'll be surprised how many clients are like that. It's $1 million property, or let's call it 500,000. Actually, let me give you a real example. We have a client right now, has a body shop, because we can do it commercial, residential, investment, not primaries, but it has to be a residential component. It could be investment, or it could be a mixed use, or it can be a commercial space. We can do 50% LTV without the credit score being an issue, regardless of how low it is. So now we have one where the property is in New York, I believe is in Belmore. Properties in New York, it is a auto detailing shop, and their property is worth $2.5 million. All they need is $200,000. That's easy. And with those, we're able to go up to 6 points. So 200,000, 6 points, 5 points on average, right? That's a substantial amount of money.
Not a bad ticket.
Not a bad ticket at all. But and I don't like we have different perspectives. Joe likes the client with the great credit, but he sees a picture in the long run,
Yeah.
right? Because you have great credit. Let me show you what I can do. Because that particular client that he's referring to right now already gave him 3 other properties, right? So he's going for consistency as far as the investor investing more money. What I'm going for,
Also, referrals from that client.
Correct.
It's the realtor on one of the deals wants to do business with us
Yep.
now. And one of his business partners sent us 2 other deals. So
and the reason why is because of the rate he got them, right?
Competitive
Huge.
rates, yeah.
It was a very competitive rate.
yeah, it was
Now-
it was first like 6.75, and then the market changed. So we got him 6.875 on an investment property. He paid like 2 points, 2.5 points. It was the first deal with him. But.
Yep. Now on the other side, right? That's what a lot of you guys see, right? But for me, it's more okay. Let me get you this money. You have a low credit score. How can I build you up now? Is let me fix your credit, or grab part of the money I'm giving you. You only wanted 200,000. How much debt do you have?
Yeah,
Why
pay
do you
down the
have a
debt.
below 600 score, right? Why do you have a below 600 score? Let's look at your credit report. Maybe you have to pay off cards. Maybe you have to pay X amount, increasing that dollar amount, but for the benefit of the client, right? Because now that's a 12%, 12 point. This particular client had a 12.24% rate. So now, if we're able to fix your credit, I'll get you a 30-year term, but it's going to be on a lower rate, right? So it's just always different perspectives on how you can view a client. But we had another question here. The other question was, which one did we answer this one? This was from Sean Colby. I have many with just experience, no property owned, or own is he properties?
Wait, when you say experience, no property owned, so they're just doing flips, just fixing, selling?
I think this particular deal, like he said, for example, with a kid or with 4 properties flipped, needs 260 for purchase to buy and hold. Are you looking for 100% financing for a traditional purchase, no fix and flip, Sean? You can unmute yourself, Sean. I think. What's okay? Can we hear you, brother? Hold on. Actually, I don't think we could hear. Hold on. Go ahead.
Yeah, I think. Can you hear me?
I can hear you now. Sorry about that. The volume was down. Go ahead, brother.
Oh yeah. The guy. Okay, so he's only done flips. There's nothing owned, so he's hard on my side to qualify for private lending, or my private money partners. So they want something cross collateralized, or they want liquidity. He has neither, and then less liquidity. So I don't know what his credit score is like. So it's like kind of be hard for him to get 100%. That's really what he wants. And I've got these guys addicted to this.
Is he looking? So has he done those 4 properties in the last 4 years, or how recently?
They're pretty recent. And then he sells them to a realtor. So they're like
Okay.
working as a team. He flips them, she buys them, she rents them out.
And he's looking to do rehab on these 2
Wait,
properties.
Joe. So, Sean, I apologize, and I mean to cut you off, but we do have people within the community that log in differently. Can you repeat your question once again so that I can say it, reiterate it to the community, and then Joe can answer it? Sean, so your question again was, or what you were saying before was,
No,
Yeah. So I'm not. So there. So I'm trying to find. I'm stuck finding somebody or some another program or something that does 100% financing for people that don't qualify for private money partnering.
okay.
Yeah. So an alternative. Maybe I can just shoot them over to you guys
Yes.
and take a chance for unsecured funding. But I don't know. He wants 260. What if he doesn't get 260? Then he's gonna end up not getting the 2 properties that he wants to buy and hold now.
So is he doing renovation on those 2 properties?
No, they're already renovated. She's just selling them back to the flipper. He's trying to get into buy and hold now and get out of flipping.
Yeah, so it can't be like 100%. It seems like it's a DSCR purchase, right? It's not going to be 100%.
Yeah. It's,
Wait. So he bought the property at a distressed value, fixed it up, and he now wants to get into holding it. So he wants to DSCR into it. So it's a 30-year mortgage. Is that what you?
I mean, originally, yeah. So they're already rentals properties.
Yeah.
He's just buying it back from the realtor.
He's buying
So-
it back from the realtor. That-
Yeah, he flipped them and sold them to her. Now he wants to buy them back from her.
Okay.
And get because he sees what
Do a
how private money
purchase,
works.
but he's gonna.
What's
Money.
Joe? I mean, Carl. What would be your strategy on this?
Well, they want to purchase it back, right? So, what's the main angle why they want to purchase it back?
You want to hold it?
He sees now how private money works, and he wants to build his portfolio now and just buy and hold them with rental income, and then
Rental income.
he could cross collateralize in the future on buying more properties. I think that the realtor is just coaching them on it and say, hey, you could buy these from me. I don't need them anymore.
What's the credit score?
Flip it.
What is the credit score?
Oh, very important. What is the credit score?
Very important when it comes to that. Yeah.
But the Bugs Bunny credit score, I think it's in the low 600s, to be honest. I haven't seen this profile in a few days, so six ish, 680, something like that.
680.
680. It's high. It's high sixes.
Well,
I mean,
it's
680.
good, but
That though, because I have his profile, I'm just not looking. I'm cooking right now.
Yeah, I have an idea what we could do, but it's like, you know, it's part of the advanced class. I can't give this
He's
strategy.
saying
to
submit
all
the
of-
deal. He's saying submit the deal, and we'll work on it.
Yeah,
Get it
let's-
done.
Let's talk tomorrow, Sean. I'll hit you up.
No, but we do. We
I just wanted to strategize and kind of, because I think he's kind of more standoffish on unsecured stuff, and he's like addicted to private. Like he sees the realtor, I got her qualified, right? It's like, man, these guys do 100% financing and this and that, and all you need to do.
100% is only for like the fix and
I
flip
have
stuff.
a way that he could purchase these properties potentially without putting money into it. It's a secret, though. I can't.
when you say unsecured, what do you mean by that?
Just like term loans or business funding. I don't think he's going to qualify for any of those. So that's why I was trying to strategize. You guys got some secret sauce.
But if he has a 680 score, I think he possibly can. But I don't think that would be the
Count on that.
I'm thinking-
That's just it.
Okay.
I'm
All right.
thinking just through the real estate, there's a way he could get it done.
Well, Sean, listen, let's do this after this, just because I don't want to eat up on this time. Let's do this. Reach out. I'll give you Sean's contact information. Right. Reach out to Sean, and then let's discuss this. Like I think we can definitely get this deal done.
Yeah.
100%. There's a couple other questions we have to ask, but we can definitely get the deal done.
Yep. And then, I know the person that owns the house too. I've done a lot of deals with her. So,
That's good.
Okay.
Close family.
All right. Perfect. All right. And then, okay. So let me just go on to the next question, Sean. What are the 2 to 3 reasons a hard money loan fails to close, and how can you protectively prevent those issues, Sean?
A hard money loan not closing. I mean, something coming up on their credit, obviously. Them not having the money for closing fees. I mean, really, you're gonna nip it in the bud in the beginning for the most part. I mean, if they have the experience, a proper scope of work, we're gonna really be able to evaluate that loan from the beginning to make sure that it closes. But I mean, as long as they don't have any skeletons in the closet, you know what I'm saying, as far as like credit report, criminal history, things like that. But there really shouldn't be anything.
Attacks coming against me.
What?
I declare decree, they bounce, they boomerang, they ricochet off of me. I return the facts
Oh.
on to all of the senders.
I'm not
1
sure.
billion fall by fire, hallelujah.
Wow.
Yo.
Somebody's having a good time.
There you go. Too much tequila. All right. So. All right. There we go. All right. So,
Going on over there.
Joe, what would you say? What are the 2 to 3 top reasons a hard money loan fails to close?
I would say a lot of times something on the credit, like what people don't realize for mortgages, it's a FICO 2 score that we're looking at. So if you look at Credit Karma, Experian, that's a FICO 8 or a Vantage score. So those credit scores could be completely different. I had a client, he had all 3 bureaus. He had a report from Experian. It's all 670 and above. We did the mortgage pull. His score was 575. So all the time I put into his deal, we were ordering title, appraisal, everything. Luckily, he has a cosigner, so we're still able to get it done. But I would say up front, I mean, I like to do a hard pull after I collect
Yeah.
stocks. I like to make sure the money's there in the bank account. Like if they're serious, I tell them, listen, you want to close soon as possible. Let's make sure we can close. Let's get everything in. So.
That's key right there. Like before we even get the appraisal booked, we should get a hard pull. We should really see what's going on with their credit profile with all three bureaus. Make sure there's nothing that we have to be concerned about. So yeah, that's huge as far as making sure that we do our due diligence before they even move forward with the appraisal.
There you go. Carl?
I would say the same thing. Credit-wise, you got to make
Speaking to the mic, Carl.
got to make sure the credit is there. The funds as well. You could have the down payment,
yes,
and
yes.
then you don't have enough money to close. Just like the scenario we had earlier or yesterday, the guy want to buy 5.8 million, but he has zero in the bank account.
Yeah,
So
ain't gonna work.
it's not gonna work.
Yeah, maybe sometimes something might pop up with title too, but I mean, you just have to see at that point. You just have to get the title report. If you haven't seen the deed and the title insurance, you haven't seen everything. You wouldn't know until you get to that point. But just to be a little proactive in the beginning, like I said, it depends on the loan too, like the type of program. Some programs you need to have experience. So
Yeah.
So that's why for fix and flips, if someone says I want 100% or 90%, I'm like, okay, do you have a real estate schedule? Do you have HUD statements? Because I know we're gonna need that eventually anyway.
Just
I'm not
get
gonna.
it up front, right?
Doesn't make sense to do 90% of the work, get down to the goal line, and then
They're
your kicker
bluffing.
got a broken leg, and like you can't.
Yeah.
You got to get everything up front.
Do your due diligence up front. That's always what I advise. Yeah.
All right, there you go. Now, I think Ian made a comment here. For Sean's deal, can he get business credit cards, liquidate them, and then use that as 10 to 20% down on the loan? Ian, you can't be dropping the secret sauce over here, Ian.
I mean, that's not what I was gonna go with.
No? All right, but that is an option.
But that is an option.
That is an option. I want a thumbs up to that because that is an option.
If they got the credit, low utilization, and
Correct.
that time, you know what I'm saying? Because it's not going to happen. It's going to take a few weeks.
All right. Now, listen, also, too, just and being able to cross sell, right? Because a lot of the times is just having big wins or having wins in stages, right? Because one of the clients that he's trying to close today, we actually funded that client, right?
Exactly.
We were able to do a cross sell. We gave him a business line of credit, monthly payment,
Wow.
right? And I think it was what, 50, 60,000?
Around that much.
Right, $50,000, $60,000, and he came to us with looking for a DSCR program or mortgage, right? And Carl, being the expert in his craft as he is, asked him the questions. What do you have a business, right? Does it generate any revenue? Correct. And then he submitted bank statements. We were able to get him a line of credit, monthly payments. Amazing. Now every time he pulls, we're able to go ahead and when he pulls and pays it back, we're able to go ahead and that line go back to the original amount. And I think he actually ended up using that to close on this deal, right?
Exactly. About a week ago, I believe.
A week ago as
About a
well.
week ago.
Now, I guess for everyone over there, and everyone that, has joined us today, I know that there was a lot going on from transitioning over to, from Sarah and Daryl to Carl and Joe. Just want to say thank you very much, right? We're coming to a close. We just want to end with final thoughts. Sean, any final thoughts?
Yeah, absolutely. So, I mean, when you're speaking to somebody, try and get the full picture, right? Like, we have the intake form, which is a huge helper when you probe your clients. Just get a feel for what they have on the personal side, on the business side. Are they bringing in revenue? Do they have any existing loans? Do they own real estate? Just ask all the proper questions, and that's going to open up a lot of doors for cross-selling and just getting the initial goal they have accomplished.
All right. Nice. You know what?
Wow, that's a new one.
Joe, that's a new one. Joe, we're
yeah.
trying out all different buttons today. Joe, any final thoughts, any final words?
I would say there's always ebbs and flows, peaks and valleys. Just stay consistent. Today I was having a tough day. A couple files died, and then I get a beautiful fix and flip right in my lap. That's
what it is, man.
Literally 6:45. The guy agrees to the terms, sends me some docs over.
Bing bong.
Just
Yeah.
got to stay consistent. Keep working at it. Keep telling people what you do. Keep learning. And one good day could turn into a great week, could turn into a great month, a great year. So
Yeah, amen to that.
Thank you. All right, Carl.
I would like to say, whenever taking an application with a client or vice versa, just be real, tell the truth. There's ways to strategize a deal. You don't want to kill it without knowing the truth.
Nice. All right. Well, my final words are, you know what? There's a lot of ways for you to work a deal, right? If you want to go ahead and make the most amount of money that you possibly can, and going back to the episode, the beginning of the year, what your goal was, focus on deals that are going to close. Don't focus on the long term. Don't focus on the dollar amount, right? Because what's going to happen is you're going to end up waiting for the new construction, maybe a year or two. You're going to end up waiting for, the projects, the preferred equity projects. Yeah. You're going to end up waiting for all that to close, and it can take a very long time, right? But let's assume that you do close it, and it took you 6 months, 12 months, right? Yeah, and once when you receive that check for, let's call it $100,000, it's going to seem amazing, right? But what happened during the interim of that? Grab that $100,000 and now divide it by 12. What you could have done is focused on the programs
in between.
Exactly.
Yeah.
In between that could have funded very quickly. The programs that have 6 points that would have paid you $20,000. It would have allowed you to be able to make a substantial amount of money. But with that being said, there was one last question waiting for the title. Sean Colby is waiting for the title. For the title.
Talking
all right.
about a deal.
All right. So listen, everyone. Thank you very much once again. Yes. As your host, I appreciate you guys. Thank you for coming and joining us. Have a great night. Enjoy the rest of your night. And
see you next week.
That's it. And send us any questions you may have. info@brokersconnectiongroup.com. Gentlemen, thank you very much. It's a pleasure, everyone. Have a great night.